The market is not a place of logic alone. It is a place of exposure. Every weakness a man carries into the market is eventually brought to the surface, not by force, not by noise, but by time. Most people believe trading is about charts, indicators, and prediction. That belief itself is the first mistake, because the market does not test intelligence. It tests emotional structure. Before price ever defeats a trader, his own mind does. What destroys most traders is not a crash, not volatility, not bad luck. It is psychological traps. Quiet, repetitive, invisible traps that drain discipline one decision at a time. To survive speculation, a man must first understand these traps, not theoretically, but personally, because the market does not forgive self-deception. The first and most dangerous trap is hope. Hope appears the moment a trade moves against you. Price gives a clear signal, a verdict. You were wrong. But instead of acting, the mind resists. It negotiates. It rationalizes. It waits. Hope whispers that the move is temporary, that the market will come back, that patience will be rewarded. At that moment, speculation ends. Faith begins. Hope replaces evidence. Desire replaces observation. A small, manageable loss is allowed to grow. Slowly, quietly, until it becomes catastrophic. Hope feels comforting. But in the market, hope is expensive. Professionals understand this. They do not argue with price. They do not plead. They do not wait for validation. When price proves them wrong, they exit. Without emotion, without delay. Capital is preserved not by optimism, but by acceptance. The second trap is greed. Greed does not appear in failure. It appears in success. A trade works. Profits expand. Confidence grows. The trend matures. And subtle changes begin. Momentum slows. Volume shifts. Price moves with less urgency. The disciplined mind notices this. The greedy mind ignores it. Greed whispers, just a little more. The trader stops listening to the market and starts listening to himself. He wants perfection. He wants the last part of the move. And in reaching for the final inch, he often loses the entire distance. The market does not reward greed. It rewards discipline. Professionals are content with the middle. They leave the dangerous end to others. They would rather exit early than exit too late. The third trap is fear. Fear is greed's opposite, but just as destructive. A trader enters correctly. The trade moves in his favor. Instead of confidence, anxiety appears. He watches every tick. Every pause feels threatening. Normal pullbacks feel like danger. Fear demands protection. Immediate protection. So he exits early. Relieved. But relief is expensive. Fear creates many small wins, and no meaningful ones. Over time, one large loss erases them all. Big money is not made by thinking. It is made by sitting. Professionals understand that trends breathe. They do not panic at normal reactions. As long as price behaves correctly, they stay. They trust structure over emotion. The fourth trap is the illusion of easy money. This trap is subtle and widespread. The trader looks for shortcuts, tips, rumors, someone else's certainty. He wants results without understanding, but borrowed conviction. collapses under pressure. Without personal analysis, there is no clarity. No clarity on risk. No clarity on exit. Dependency replaces judgment. The market punishes this relentlessly. There are no shortcuts here. Every dollar earned without skill demands repayment with interest. The fifth trap is ego. Ego turns trading into a personal battle. A losing trade feels like an insult, a threat to identity. Instead of managing risk, the trader defends his opinion. He refuses to be wrong. He averages down, not because it makes sense, but because surrender feels unbearable. Ego converts small mistakes into account-ending losses. The market does not care about intelligence, or effort, or pride. It rewards behavior only. Professionals detach self-worth from outcomes. Being wrong is normal. Staying wrong is fatal. The sixth trap is impatience. Impatience confuses activity with progress. The trader feels uncomfortable in cash. Silence feels like missing out. So he forces trades. Trades noise. Trades boredom. Most of the time, the correct position is no position. Great opportunities are rare. They are worth waiting for. Impatience drains capital slowly and consistently. Professionals are paid to wait. The seventh trap is the hero mindset. This is the desire to be exceptional, to call tops, to pick bottoms, to fight trends. Vanity replaces logic. The trader positions himself against momentum and calls it courage. Markets destroy heroes. Trends last longer. Then ego survives. Professionals do not predict reversals. They wait for confirmation. They join strength and exit weakness. The eighth trap is recency bias. Success creates carelessness. Rules loosen. Risk expands. Discipline fades. The trader believes current conditions are permanent. They never are. Markets change character without warning. What once worked becomes dangerous. Survival requires adaptation. Complacency guarantees collapse. The ninth trap is narrative attachment. Stories are seductive. A great company, a visionary future, a compelling idea. But price tells the truth. Price reflects collective reality now, not promises later. When price disagrees with the story, price is right. Belief traps capital. Professionals follow behavior, not belief. The 10th and final trap is blame. Blame prevents growth. Losses are blamed on brokers, on news, on manipulation, on luck. Responsibility is avoided. Learning stops. Without ownership, mistakes repeat. Professionals accept full responsibility. Every loss is tuition. Every error becomes a rule. That is how growth happens. The market is not conquered by prediction, or emotion, or confidence. It is conquered through self-mastery, through discipline, through psychological control. This understanding, dominion over mind before money, is the foundation of cosmic dominion. For those who seek clarity over chaos, structure over emotion, and strength through understanding, those who master these principles do not chase the market. They operate above it.